Alrighty guys, what is going up? Welcome back to the best investing money management channel on YouTube. In today's video, we are going to be talking about the top 5 stocks that I am buying right now. A lot of these stocks are going to be a little different, right? We're going to have some of the larger blue chip stocks, and we'll obviously have some of the riskier stocks out there right now. I think there's a lot of opportunity out there right now in the market. And opportunity is a great way to make money, right? So the very first stock that I'm buying is Redfin Corporation, ticker symbol RDFN. Now, this company is disrupting the real estate market by offering lower fees for buying and selling houses. The company is growing at a very, very fast rate in general, right? 1 year ago, you could have bought this stock for $42, sold it here at $98, but right now it's trading at $53, which I think is a pretty fair value for this stock, right? Especially given that it's hit almost $100, so we know there's a move there. And honestly, this is going to be a higher risk, higher reward play. I'm not going to be dumping hundreds of thousands of dollars into this play here just because of the overall volatility, right? Right now, it's down 4.8%. That for me just brings opportunity. But the thing about it is before it hits $100, I could easily see this stock hitting 50, 40, 30, or in some cases $20 a share before we see that overall growth. That's the thing about growth stocks is there is a lot of volatility, right? You guys can see just the rapid move, which is crazy. So the second stock that I am buying is Disney. Disney has seen a lot of growth over the past couple of months just because of everything is starting to reopen, and they are making a ton of money off Disney Plus and movies. I think that Disney is an absolute strong contender for the next 5 years, and I think that this company will dominate. Given that it sold off from its highs, it has a tendency to use this 200 moving average line as support. I think that this is going to be an absolute bargain, and looking back in the next couple of years, we're going to wish we bought some at 180. I honestly think we'll probably hit these highs here by the end or probably by next year of some time. I think that's a fair prediction for that, because if it does, that's a move of about 8%, which is pretty decent, to be honest. And I think that we'll get a lot more buying pressure in the next couple of months because Disney has always done very, very well in the winter times, which is fantastic. So the next company that I am buying is Robinhood. Robinhood had their IPO, and honestly, there was a ton of volatility from this. The thing opened at $38, hit $85, sold off back down to $30 or sold back off to about $50, bounced back up to $59, and has been stair-stepping its way down. I think it's going to find some overall support near about $45. And my kind of idea for Robinhood is going to be very similar to Redfin, right? This is going to be more of a speculative play. It's going to be a higher risk, higher reward, just because Robinhood is still a startup, right? It's still a company that's growing, and it's not a really super well-established company. There's a lot of strong outlook for Robinhood, but honestly, they're in the news quite often, so there's gonna be some volatility with this one just by looking at it, right? I think that probably by next year, we'll see the stock sitting at about $60 to $65 a share. I think that's a pretty fair value for this. Now, the last and final company we got two more. The next company that I want to talk about is NIO. NIO over the past couple of weeks has been selling off quite a bit. For me, that just brings opportunity, right? If we look at the year-to-date chart, we have a nice solid upward trend. Has a tendency to use this 200 moving average line, this yellow line, as support, right? It comes in contact once, twice, 3 times, almost 4 times, 5 times right here, and every time we get buying pressure. So for me, that just brings a little opportunity to average in my shares. I've been buying NIO for years now, right? I bought in at $11, $22. So I'm more than doubled my money. And any time that this stock does dip, I always just average in. I bring up my share size and I bring up my average cost because I think NIO does have a very strong outlook for the next couple of years here. Now, the last company is another electric car company, is Tesla. Tesla has been killing it in the news. And honestly, one of the main reasons why I love Tesla is just because of the overall growth. I think we're just getting started, right? And I know that that's crazy to say, but I think with the administration we have in office, they're very, very electric vehicle focused, right? I think that Tesla is going to profit for the next couple of years with this administration for sure. And I think the overall outlook for the demand of the car and the overall growth we've seen is fantastic, right? They've killed it on their past couple of earnings. They're becoming more and more profitable. They have very little to no long-term debt, a ton of cash on hand. They're just a dominant company, and I think we'll see them really, really killing it in the next, 2 to 5 years. I think that this is just an absolute bargain for this price. And I know a lot of people always like to say Tesla is overvalued. You could have said the same thing for Amazon, in 2012, 2010, when Amazon was still moving its way up, right? Tesla is in that same growth category right now. And I think that, all these stocks carry risk for sure, but overall, if you're smart with it, you guys can make a ton of money. So that is it. I hope you guys enjoyed the episode. And if you did, hit that like button and subscribe. We'll see you later. Remember to stay happy, stay positive, and stay safe out there. Take care, everyone.